Hey, so you're looking to get into trading, but one thing usually stops you. It's your mind. You don't know exactly when to buy, when to sell, or when to hold. In this video, I'm going to show you how to manage your emotions and your fears to actually take your trades to the next level. Because the trade you don't take is the money you don't earn. See, the thing about this video that is very crucial is a lot of people talk about the strategies of trading, the techniques of trading, and do this setup or do that setup. But they don't understand that these are all a secondary step or secondary byproduct of your mind. No matter the strategy you learn, no matter the mentor you have, no matter the amount of books you read on trading, if you don't have the right mindset and psychology to execute trades, you will not become a consistent trader. Worse than that, it actually leads to you being a unprofitable trader or a failure of a trader. Why? Because when you let emotions guide your trading, you take trades when you're not supposed to take them. You don't take trades when you're supposed to take them. And then when you let emotions guide your trading, you change size, you change strategies, you change techniques, and it leads to a whole lot of inconsistency. That's because you haven't mastered the game. So here's 3 tips you can use to master the game and actually get to become profitable as a trader step by step. Number 1, you need to realize that trading is not an emotional game. Trading is a systems game. You need to develop a system for your trading that you can follow step by step almost every single time. Now, there's not going to be 100% time where you do things perfectly because you're emotional and you're a real human being. But if you don't have a setup that you can execute over and over and over again with confidence, guess what? You're going to do inconsistent trading. You're going to be more prone to FOMO. You're going to be more prone to missing setups. And you're going to be more prone to taking irresponsible and emotional decisions. So the first thing you need to do is build a system. The second thing you need to do is build confidence. When you have a system that you trade over and over and over again, it allows you to have some repeatability in the markets. This repeatability, whether you're selling options, whether you're buying options, whether you're swinging options, whether you're day trading options, is what gives you the confidence to be able to compound your account. If every time you have to get into a trade, you are second guessing your setup, or you're second guessing your strategy, or you're dealing with a new instrument or ticker, it's going to make you hesitate. And let me tell you one thing, the mind is what does the trading, not the body. Since the mind is what does the trading, the things you need to watch out for in the trading industry are psychological triggers or psychological things. And people talk about master strategy and edge first before you get into emotional psychology. But I'm going to tell you now that mastering your edge starts with emotional psychology. You can't have an edge if you haven't emotionally stayed consistent with a single setup over and over and over and over again. And by the way, that's a caveat. One of the easiest ways to build confidence quickly, to build a system quickly, is to trade no more than 2 setups. Really 1. There's a trader I know who only trades 1 setup. Her name is Camila. I saw her YouTube videos, and she only trades that setup. And she said she traded for 5 years. And only on the 4th or 5th year, when she only decided to trade that 1 setup, did she actually become profitable. Sometimes we know too much for our own good. Thereby, our mind is running through too many options and too many scenarios during the trading day, and it forces us to overanalyze and either miss trades we're supposed to get into or get into trades we're not supposed to get into. So you want to narrow your setup to 1 trade, especially if you're buying and day trading. If you're somebody like me who does a lot of selling, you want to find 4 or 5 tickers that you are very familiar with that you sell options on all the time. This way you know how it moves, you have an idea of the implied volatility, you know what to expect, whether you're going to get filled or not, whether the contract's going to get filled or not, and you have some type of regularity in your trading system and your trading setup. The third thing that you want to worry about to stabilize your mind is to do it scared. I'm going to tell you something. There's going to be a lot of times where either there's going to be news coming out, there's going to be a market condition coming out, the market is moving weird, and you're going to want to not take a trade that week, or you're going to not want to take a trade that day. As a day trader, that might be fine, but if you're somebody who's on the selling side, who's selling for premiums, or you're buying long-term swings, you don't want to miss opportunities, because the thing about it is that the time that you let pass that you don't trade is the premium you don't get paid during that time. Especially as a seller, that time period, that week period that you're selling options on to collect premium will never come back again. So that will forever be a missed opportunity and missed premium and missed time and missed system to actually compound your account. And this actually goes back to the word when I say having a system. If you're missing time, dates, and opportunities to make cash flow in the market, you're going to mess up your compounding math very, very aggressively. There's actually a saying that says 1 inch away means 1 mile out. That means that when you're targeting something that's from a far distance, especially something like compounding interest, when you're doing it over 5 years, 10 years, 20 years, 30 years, 1% away, 1 week where you don't make 1% return on your money can literally change your overall returns by 20, 30%. Instead of making 110 million after 20 years, now you're only making 50 million. And it might not sound that bad, but trust me, depending on the capital you start with, this can be a huge, huge, huge determinant on your overall wealth and net worth. Think about it, guys. Why do most financial managers charge 1%? Because 1% compounded over 10, 20, 30, 40 years is millions and millions of dollars. So you want to do yourself a favor and sell anyways. Take that trade anyways. Collect that premium anyways. Even if you have to mitigate the risk and actually be more conservative, I want you to take that trade. Number 4, it is a bonus tip here, okay? Stick to your system through time. First, by paper trading it so you can get experience and build confidence in it. Then 2, by using real money. This way, for you, trading will become a task that you do, like brushing your teeth or taking your shower, versus just risk. The thing that determines risk and not risk is usually experience. The more experience somebody has in something, the less risky it is for them. The less experience they have in something, the more risky it is for them. So what you have to do is stack the coins in your favor by getting more and more and more experience. This is why you need to tell yourself that if I'm managing risk, I'm going to put on risk. If I'm managing risk, I'm going to put on risk. What does that mean? If you know that you're managing your downside, you know the worst you can lose, and you're okay with that, then it is incumbent on you to put on risk and put your money on the table and take that trade. See, no matter what you do in life, risk is never 0%. Okay? There's always going to be some degree or some level of risk. The difference between the rich and the poor is that the rich know how to manage risk, and risk for them is on a continuum. But the poor see risk as black and white. It's either risky or not risky. It's either black or white. The rich don't think that way. The rich think, how can I mitigate my risk? Or better yet, how can I make the risk actually work in my favor? An example of this is cash secured puts. When you sell options and do cash secured puts, and I have a video on that up here somewhere, or I'm going to put the link below my channel. When you sell options on cash secured puts, the downside of that is you get the stock at the price you sold at. It can be a win-win scenario for you if you wanted to buy that stock at that price anyways. So what others see as risk is actually a win scenario for you because you get to buy an asset, the stock, at a cheaper price, and you got paid to do so. This is the strategy that Warren Buffett did for so many years. Matter of fact, I'm going to put probably a screenshot here that you can see. In 1993, he sold puts on Coca-Cola and made $7.5 million selling options and collecting premium for what other people might think is risky, but for him, it was a win-win scenario. So that being said, here's 3 things you want to do to manage your emotions from a psychological standpoint when we step away from the strategy. Number 1, take a break from the markets. Sometimes you need to step away. Go and get a cup of water. Go get some coffee. Reset your mind. Reset your confidence. Number 2, if you're on a losing streak, guess what? Start paper trading. Take a step back. De-risk. Build your confidence up again, and then adjust. Because guess what? The market does actually change. It's never the same throughout. Trump came out with inflation, the market's changed. Interest rates cuts, the market changed. COVID happened 5-6 years ago, the market changed. So the market goes through cycles, and sometimes you might just need to take a pause and reset so actually come back and approach the market from a better, more stable mindset. Number 3, get a mentor or a trading partner. Find somebody who's trading and having success and balance your thoughts and ideas with them. Tell them that you're thinking about selling this trade or buying this leap or doing this strategy. and see where they are in the market, especially if they have a hot streak. Accountability removes excuses, and accountability also removes fear. So what you want to do is